Welcome to Personal High Frequency Robotic Trading, offering the future of stock trading today. It's how to win on Wall Street in today's computer-driven market, because the market has changed. Before we get started, I'm just going to read our legal disclaimer. The following is for demonstration purposes only. We do not make buy, sell, or hold recommendations. Unique experiences and past performances do not guarantee future results. You should speak with your CPA or financial representative, broker-dealer, or financial analyst to ensure that the software/strategy that you utilize is suitable for your investment profile before trading in a live brokerage account. All advice and or suggestions given here too is intended for running the robotic trading software in simulation mode only. The expressed views, opinions, and concepts of the presenters are just that, opinions. Interested parties should conduct their own due diligence prior to engaging in the services of any robotic trading software. What is robotic or high-frequency trading? It's a program trading platform that uses powerful computers to transact a large number of orders at very fast speeds. High-frequency trading uses complex algorithms to analyze multiple markets and execute orders based on market conditions. Typically, the traders with the fastest execution speeds will be more profitable than the traders with the slower execution speeds. All major financial institutions have shifted to HFT computers. According to Morgan Stanley, 84% of all trades are done by high-frequency computers. The average trading volume is now over 6 billion shares daily. The average stock is held for just 22 seconds. The buy and hold method doesn't work in today's computer-driven market. Question is, can the average middle-class investor make money in today's market? Yes, absolutely, and that's what we're going to cover in the next few minutes with this presentation. The experts said it couldn't be done. Those who say it can't be done shouldn't interrupt those who are doing it. The experts were wrong again. Welcome to robotic trading. The robotic trader is a form of artificial intelligence, recognized by industry insiders as the only fully automated stock trading software program available to the public. It identifies stocks to buy, opens and closes positions automatically, turns itself on in the morning at the opening of the market, trades all day, constantly monitors over 8,000 stocks for you, makes buy-sell decisions and executes them for you, takes the profits for you, turns itself off at the market close, and it does it all 100% fully unattended. No monitoring, no emotion, no hassle. Here's how it works. This is a very simple explanation of what it does. In this example, the robotic trader is trading 100 share lots. However, it will trade as many share lots as you would like. Start here. The trader buys 100 shares of XYZ stock at $19 a share. Now, you can tell the trader what you want it to pick if you have favorite stocks, and it will work with those stocks. Or if you don't have any, it will go in there and find the ones that meet the parameters that you're looking for. It's all pre-programmed. The trader continually monitors your stocks for you. When the stock trends up and peaks and pulls back just a little bit, the trader sells at a profit. In this case here, the stock sold for $20. You made $1 per share times 100 shares equals $100 in profit. Monitoring continues. When the stock hits the low, the trader buys. In this case, it bought 100 shares at $18 a share, and as the stock trended up and peaked, the trader sells at a profit. This stock sold for $22. You made $4 a share times 100 shares equals $400 in profit, and you weren't even there. The trader continues to buy and sell completely unattended. This is a hypothetical example of just one stock. The robotic trader can monitor over 8,000 stocks daily. The trader is integrated with the major brokerage houses, and here's a list of them there. And it also can trade on international exchanges, as you can see on screen. So when you log on to your trader and to the software platform, you can choose which one of these brokerage houses you want to work with, and it might be one you already have. Let's look at some real-world results. This person here is using TD Ameritrade, and you can see they have $100,000 in their brokerage account. And they made a decision to trade only one stock for a year. And you can see the dates on there from 12/18/12 to 12/18/13. And you can also see down the bottom what the results were as the trader captured money as the volatility of the stock went up, it sold, down, it bought, up, it sold, down, it bought. Simple as that. And let's take a look at what that looks like. You can see here, there's a little valley, it bought. As the stock trended up, it peaked and started to fall back a little bit, it sold. It bought there, it sold there. And so on and so on and so on. Day in and day out, week in and week in, month in and month out. And it continues to make money even when it's trending down. It's like a staircase, right? There's a little valley there. It buys, it sells. It buys, it sells. And it continues to do that all the time, completely unattended. Very cool. Now here's a different scenario. This person here also uses TD Ameritrade, and they're trading $25,000 with $25,000, and they're actually working with multiple symbols, multiple stocks. And this is a very short duration report. This is only 2 weeks from 1/28/14 to 2/14/14 of this year here. And you can see what happened with $25,000 in that 2-week period. This particular strategy brought back $2,740 in profits in 2 weeks. That is really good. Congratulations to you. I'm going to explain a little bit how this worked. And in this illustration, I'm going to use a symbol called VMEM. Did not know what it was, so looked it up online, and it's a violin recording company. I'll expand it a little bit here. And you can see this gives you a good idea how the trader works. On the 28th of January at 11:12 in the morning, the trader went out and it bought 1,000 shares, made the decision to buy it by itself at $3.43 a share. And now on the 29th, the very next day, looks like 25 hours later, the stock had peaked at $3.77. It sold. It made the sell decision on those 1,000 shares at $3.77, and there was a $340 profit. Now, what I did is I went right to a Google chart just to see something. I saw the report, and I said, what did it look like on Google? And there it is, VMEM. There's the date, right here, January 29th, and there's the time. There's noontime, so it was a little afternoon. And you can see that VMEM spiked right here with that red arrow. So it had a spike, right? And look what happened. Would you have been there to grab the profits? The trader was. $340. And that's all it does all the time, ladies and gentlemen. It's always working for you. Here's 3 examples. The first one is Microsoft of the buy and hold versus trading the volatility of that particular stock. And right here you can see that Microsoft, if you bought Microsoft on 5/3/10, May of 2010, it was $30.86. Then on January 30th of 14, just a little bit less than 4 years, it was $36.86. This is a very simple strategy. The trader's working with 100 shares. It's a $1 up and a $1 down strategy, which means when the stock goes up $1, it sells. When it goes down $1, it buys. And you can see this is the actual Microsoft growth chart, and this is what it did. And here is the difference with the old buy and hold. Buy and hold would have been one trade, and you would have made a $600 profit in that whole 3.5 to 4 year period. It's not a lot of returns for having your money tied up that long. The trader, by catching the volatility of that stock, would have made 78 trades for $5,700 in profit. Halliburton, same exact scenario, same dates, May to January 2010 to 2014, 100 shares, $1 up, $1 down strategy, buy and hold. Again, would have just been one trade. You bought it then, and then you just sold it now. You would have made $1,800 plus. The trader would have did 210 trades, and you would have made over $15,000 right here. Now, you're saying, oh my gosh, the trades, there's a lot of trades. How much are they going to cost? Well, I can give you one example for sure. TD Ameritrade, if you're using the robotic trader, they're giving you a 50% discount. So they usually charge $10 to their customers, if you will. But if you're with the robotic trader, it's a $5 trade. And then JP Morgan, the same exact thing. This example is based on 100 shares. Here you go. Exactly the same scenario. One trade, $1,200 plus. The trader would have made 177 trades in that same time period for over $13,000. And there she is, our favorite little trading robot. I'm always working, and I do not make mistakes. I never miss. I'm going to close with this. I mean, there's a lot of information available, and just make sure that you get back to the person who invited you and get all your questions answered, because I think you would all agree that no one cares more about your money than you do. So why do we give it to somebody else to do stuff with it all the time? Why don't we take control of it ourselves? And now you can. So I strongly recommend get the evidence, get your questions answered, and do it as quickly as possible. Why wait? Purchase the software. You can simulate until you're comfortable, which means you don't have to put live money in. You can simulate right through a brokerage house, and the trader doesn't know the difference. He doesn't know the difference if it's real money or if it's simulated money. It works exactly the same. So you can find the strategy that works best for you for what it is that you're trying to accomplish. So you can now take the fear out of your financial future. And congratulations and welcome. And bye for now.